Welcome there, Investoholics, to another ETF Spotlight review. Today we'll be checking out IVV, which is the iShares S&P 500 ETF. It's brought to you by the fine people at iShares, which is a BlackRock company. Stick around if you are interested in investing in the S&P 500 in America. That gives you access to all the heavy hitters. Hey there, Investoholics, this is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so that you can navigate the markets wherever you are. My mission here at KrackTheSky is to give you the knowledge and the confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. So don't be afraid to give me a thumbs up. And also subscribe. It helps get the message out there. It helps pump the algorithm for YouTube. Just in general, it sort of gives me a bit more motivation as well to keep doing these little reviews for you guys. Thanks. Okay, so the S&P 500 ETF Trust seeks to provide investment results that, before expenses, correspond generally to the price and yield performance of the S&P 500 index. So the index is widely regarded as the best single gauge of US large cap equities. The index includes 500 leading companies. It captures approximately 80% of the available market cap. Y factor, so tracking record, so it's really tight on the tracking record, so it's very, very close. As always, looking for diversification. So with this trade, you're going to get your 502 or 503 companies, the largest companies in the US, and that gives you also additional international exposure, because a lot of those bigger companies have international exposure. So as I'm just going to say, it's global leaders, I suppose, is another way of saying it. And also covers some new industries, so like a lot of tech type stuff as well. So as those companies grow, they'll be included in the S&P 500. So pretty much you don't have to do anything. You just let the index do its thing, and you capture all the upside of those new industries as the companies grow and come into the index. Okay. So it had a net asset value of $601.60. So it's trading above that at $602.74. We've got a market cap of roughly $5 billion. Pretty cheap. Management costs at 0.04%. Distribution frequency. So we're looking at a quarterly dividend payment of January, April, July, and October. Dividend yields relatively low, 1.08%. God, dyslexic or what? The S&P 500 represents one of the most efficient and liquid asset classes in the world. Index, as I said, sort of comprises roughly 8% of the total US market capitalization. So just with owning those 500 companies, you get majority of the market cap size. Can be thought of as an encyclopedic representation of the US equities market, encompassing all sectors of the economy. So the passive investment approach is getting more traction and gaining exposure in the US large cap equities. iShares S&P 500 ETF continues to impress with its ultra low fees and excellent execution. IVV seeks to emulate the risk profile of the S&P 500 at an really low cost of about as I sort of said, it was 0.04% per year, standing out as an excellent choice for passive US large cap equity exposure. So this is sort of one, if you're keen to look into that sort of part of the world, that's one to have a look at. Also, as always, we need to be doing our research. So there's a few different options for investing in S&P 500. Have a look at SPY. put a card up there. I've done a video on that one, and also have a look at QUS, a couple of interesting alternatives. Okay, so top 10, you're looking at all the usual suspects, all very, very large companies with international exposure. If you don't know those names, I think you've been living under a rock. So throughout your life, you would have, since inception, so from early 2000 through to October 7 when we did this video, you're looking at 251% gain on your hypothetical $10,000 investment. So BlackRock employs a sophisticated portfolio management system and trading capabilities to ensure that the risk-return profile characteristics of the S&P 500 while achieving a low TE against the index. Over the past 10 years, IVV has held up as well as most of its peers during the downturns since inception. So, you can have a look at the chart down below, or go and have a look at a bit closer detail. It's hasn't had too many low lows, if that makes sense. So we had the fund delivered roughly 20%, towards the end of last month. So 30th of October 2021, so about 20%. Sector breakdown, looking at information technology is 27.55%, healthcare is 12.96%, consumer discretionary makes up 12.3%, and financials make up 11.5% of the index, and then communications follows up there with 11.25%. So this ETF is probably likely to be appropriate for investors seeking capital growth with a medium to high sort of risk profile, I suppose. More on the medium end, I would have thought. So I wouldn't be buying this if you're a sort of a short-term investor. I'd always be sort of using something like this if you're looking for long-term gains. So Morningstar gives this a silver rating, so that's 4 out of 5 stars, so that's a pretty good rating. So majority of ratings are between 1 and 0, to be honest. So I think silver is a pretty good rating. I think this one's been downgraded in the last few months, so keep that in mind. But as always, do your own research. I think this is definitely a good option if you're looking for international exposure with one trade. This is definitely one to be looking at. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.